Hello, everyone. How's everyone doing today? Kevin, Hugo, Ingmar. Hello, Paul. Alexander, you're always the first one here, or the first one to say hello. Consistency. NG, how are you? Gorkum? Okay. So, dollar's up today. So we're playing right around with the 2-week off number. You guys could see my charts, right? 2-week off number in euro this week, I believe, comes in right around 21.83. And we're playing with it. It's right here. 21.81. Okay. And euro's weaker than pound today. So EG's coming off. It's my contention that we're going to take out the low that was put in Friday. There's pretty good pressure there. We'll see. I've now trailed my stop to above yesterday's high and took partials from 22.10. I've noticed Aussie's a little stiffer. Okay. I noticed that yesterday when even euro was coming off. The Aussie was pretty stiff. Okay, so um, makes me think that if we take out this low, there's not going to be that much left, and I do think Aussie's going to be a great long once we clear out stops under the 76.80 level. Maybe we go to 76.10 to a half or so, something like that. And yesterday when gold came off, look at what it's holding there. Okay, this was yesterday's low here. And if you want to put it's a 4-hour chart, 50-day moving average. Really, we've had quite a few nice hits here on this here. And then yesterday's low. One thing I can say, and I still think there's a shot for another high just based upon how some of the gold shares are acting. I will say, though, that gold shares have been underperforming quite a bit. Thank you, Paul. But, we're just moving sideways. I'm thinking we get one more high there in GDX and maybe one more in euro. But look at the difference between gold's performance. See that? Consecutive higher highs. And the best we could get even out of GDX is sideways. So I do think it'll resolve itself to the upside. Maybe this is a wave 4 triangle and we get one more high. So I'm still going to be paying attention to gold if we get up towards the 61.8 level for a possible short. I don't think it'll confirm in 1920. Okay, so Bitcoin is trying to hold, trying to turn. To me, it's still an either or. I really, wouldn't know what to do to take a position here. So when you don't know, you don't do anything. And, I must have been asleep at the wheel in stock indexes yesterday, but boy, was that a bag holder's opening or what? And look at how it finished. So I'm not saying that reversal day is going to be a key day, but that was a great scalp for sure coming in after a holiday. So S&P's put in this negative candle. NASDAQ was more of a negative candle. But I'm still going to be patient and still think we're going to make a new high. When you think about it, there's a new high in gold and there's a new high in stock indexes. Really all these markets are moving together. I know I've talked about all one market. It's just a matter of degrees. And, I think that a lot of these markets are due to inhale sometime around the end of the month. The pound. I didn't like yesterday's action. You know, it was a stop hunt. I had an opinion yesterday was that, you know, to sell it, but you could get a nice bounce here. I don't know if we're going to take out the high of the move, but maybe a good scalp to 41.83 or so. So that's my opinion. Maybe 142. Okay. And I think that's about all I want to cover. You know, it's still a coin toss on what we have going here. I change my mind every day because we're in a range. Yeah, I'm not sure if yeah. But yesterday's stop hunt, you know, the point on cable is who's short after yesterday. We took out all the buy stops here. We took out all the buy stops here. So I think they cleaned out a lot of the shorts yesterday. So um, that has me paused. There's no fuel above these highs. You know, stops on buy stops and sell stops are fuel for you know, a counter trend for the move, and I think they used a lot of gasoline yesterday. Okay, and dollar, if I'm right, there still could be, you know, some type of move back up towards this 90.40 level. You know, we'll see if we test Friday's highs. We'll see, getting a little lower high here. So book partials on both Aussie shorts and Euro shorts and BE stops, and we'll see what happens the rest of the week. And we'll see if this strange correlation of when Bitcoin is up, gold is usually down. So we'll see what happens there. Have a great guest. If any of you guys have read Jack Schwager's latest book, The Unknown Wizards, John Netto is with us. Jack wrote about John. Going to ask John a little bit about his origins before we get to the markets. And John said last time he was here, I think it was March, he said, buy beans. Okay. And they kept going. And back then he said, you know, there's still upside in equities. He didn't see any reason for that to change. So we'll see if there's any changes in his outlook. So stick around for John Netto. Good morning. How are you, Blake?
Good morning, Dale. How are you?
Tired as hell.
Really? Yeah, I forgot to ask you, how did your birthday celebrations go last week? Did you end up having a beer?
I had a beer.
Oh, well, good for you.
And took a lot of naps. So
you?
yeah, that anyway, very quiet, peaceful birthday.
Yeah. Well, you know, awesome. I'm that's always a good thing, I want to say.
The highlight was Leandro singing happy birthday to me.
Yeah, that was definitely
Cool.
awesome.
Yeah.
So
what are you thinking here?
What's that?
What are you thinking here? So we're getting in cable and euro.
You know, first of all, so yesterday I was filming a video. Sometimes it's interesting. Over the last couple of months, I have filmed some videos, you know, for the team, basically for some basic education. We're kind of revamping our education part of Forex analytics because, you know, there's a lot of new traders. They come in and, you know, they want to learn like some of the basics. And so I was filming a video about support and resistance yesterday, and it's funny when you go back and you teach things that are often, you know, overlooked by those of us who have been doing this for a long time. You know, you go back and realize, oh, you know, that concept of, you know, hey, I'm dealing with some support and resistance, and by the way, the markets range more often than the trend. I mean, you know, we get spoiled, and I have to say that at this moment, you know, when you take the market that's really been trending for so many years in one direction, that's not the norm. And most markets really are range bound, you know, 75, 80% of the time. And when you deal with a market that's, you know, range bound more often than not, um, that's when trading off of like support and resistance levels can be really important and beneficial, and you know, pretty lucrative too. And you look at the cable, I mean, you were talking about like the little false breakout that we had yesterday, cleaned out all the longs, yeah, and it pushed us right back towards support. And here we are, you know, probably in a range between 141 and 142.50,
Yeah.
that may end up sticking. And you know, you got the euro dollar that, for all intents and purposes, is probably within a 121.50 to 122.50 range. So I think we got to respect those. And I actually was short some euro dollar, averaging around 122 um, from last week. And I told everybody this morning, I'm like, I got out of it at 121.75, and it was just really poor entries on my part. And you know, I was just sitting there like, okay, well, as long as we stay below 122.50, I'm going to stay short. But as we started dropping down towards this 121.50 this morning, I'm like, man, we're in this, you know, ascending channel. Really, we're not going anywhere. We're probably just more range bound than anything. And I'm like, I think I'm just going to take my trade off here. And I think what we're going to be doing is, you know, tightening in this range a little bit ahead of non-farm payroll, because we have non-farm payroll going into Friday. And I'm like, why have this exposure here for the next couple of days where, you know, we might be better off just looking for a breakout on Friday. And I think we're going to be just developing this range here for the next couple of days. I think that's what it's going to look like. And so I'd rather, you know, let the range tighten up and play it that way. Like I said, I've had a really poor entry last week on the short side of the euro, but I stuck with it because I figured this resistance was holding, that we've been discussing about, but we're not getting any. It's not like I'm sitting here looking at the euro thinking, oh, we're heading back to 117 at this moment. I got to have some reasoning. I don't see it. So anyway, that's kind of what I'm thinking with, you know, some of these currencies. And you look at the Aussie, I mean, we're very much range bound between 76.80 and 78.20. And most of the currencies we're just, you know, trading in a range, and you can see the ranges are very well established. So anyway, you know, Dale, you asked for my thoughts. Those are really my thoughts, is that we are stuck in some ranges, and we might be so until
Friday.
we get into Friday. And I think Friday, you know, jobs report might actually matter this week, because remember, we do have the FOMC, and we have, or yeah, well, the FOMC this month, and the talking about tapering could happen as early as this month if we have a good jobs report. I'm
Yeah,
sorry?
because everyone's going to be expecting, worried about another bad number. You know, maybe this
Yeah.
time maybe that was an aberration, and we get real strong numbers this coming Friday, like a million jobs.
Yeah. Well, that's
If they could
what.
find the people,
What's that?
if they could find the people to take them.
Yeah, I mean, that's the worry, right? Is that
Yeah,
the jobs report is going to come in again below 300,000, and you're like, holy crap, you know, maybe we're just really lagging behind in the jobs. And then that's why, you know, I remember last month we were like, wow, okay, well, we know why the Fed chairman has been so dovish, right?
yeah.
So you know, and then we have a bigger issue, right, Dale? And this is
Yeah.
where I'll take some comments from Steve and Stelios if they're here, because if we have another weak jobs report, but we have this persistent uptick in inflation, what does that give us? What kind of environment do we have then?
Stagflation.
Stagflation. Oh yeah,
Yeah.
I'm sorry.
Stagflation, baby, and that's not a word that no one wants to hear that word, right? Like
Well,
slow growth.
you could have a stag party
Stag.
for for celebrate stagflation.
Yeah. So, I had somebody asked, Forex Gal said crude, crude, really quick. And then let's talk a little bit about this whole stagflation environment. Is it even possible? But I want to talk a little bit about crude oil really quick. Crude continues to rally. I'm a little worried about it from yesterday because we did have a false breakout, but we broke out of this channel or channel. I'm sorry. We broke out of this triangle. If you're a Forex Analytics subscriber, you knew when it broke out yesterday, when we broke out above this 67 50 level, but we're stalling above 68. Now we are above it right now, but I think we have to see where we're going to close. And we should trade up to 71.05. That now that we've broken out of the triangle, I'm just worried that that yesterday we created some sort of false breakout. But again, it's we'll see if we can we'll see if we can expand on this today. It does look like a bullish breakout now that we're outside of the triangle. But so let's talk about possibly stagflation, Stelios, or what happens if we have slower growth and persistently high inflation? I mean, what happens? How does the economy get through that?
Well, the question is, why do we get higher inflation while growth is low? And the answer is, we're not getting high inflation because there's huge amounts of demand. It's basically more an issue. I mean, I was talking to a friend of mine who I've mentioned him quite a few times here, who's a ship owner, and he has containers among other things. And he's saying basically the price of containers have over doubled basically in the past months, and there's a huge shortage. Not because there's so much demand, but because it's difficult for them to be moved. I mean, I don't know the details, but basically it's something that is theoretically transitory, but it's not transitory in the way the Fed thinks it is. So this thing is going to be measured in months and years, not weeks until it goes back to normal. So this is a very difficult situation when you have. We saw PPI today in Europe. Did you see that number? 7.6% year on year, today's reading, while retail sales in Germany was negative 5.5% month on month. So this is not something you want to be looking at, and if you're a central bank, there's not much you can do. That's the problem. If you cut rates, it's not going to help inflation and the cause of this inflation. So it's very difficult.
Yeah, and then if you raise rates, then you're choking off growth.
Yes. So you can't raise rates in this environment, but you have rising inflation. The Fed and the other central banks, the ECB, they told us yesterday, I can't remember who it was from the ECB, that, oh yes, this is transitory. So they're all convinced this is going to go away within a few weeks or maybe a couple of months, which is
I
not
doubt
happening.
it, Stelio, they are convinced, but as you very well know,
That's what they're saying.
Would they say otherwise?
No, they wouldn't. They wouldn't.
Exactly.
And also, to answer Paul's question, he says, so gents, where has the U.S. workforce gone? Well, basically, they've been given incentive not to work. They're getting the paychecks, which are pretty much what they were getting paid for working, and they're sitting at home nicely and doing nothing.
Yeah, I've said it before, Stelio. The most basic economic truism is that you always get more of what you subsidize and less of what you tax. So if you subsidize unemployment, guess what you get? Unemployment.
Yeah.
There is another factor, and until school's open, I'm sure there are a lot of parents that had to leave their jobs to watch their younger children, and it's not even summer yet. So, yeah, I think we'll be able to judge that. And the women, the stats I've seen, that there are more women that are not re-entering the workforce. And I think that has to do with taking care of the kids. What do
Yeah.
you guys think?
Well, I think a lot of I think the whole landscape to to our workforce is changing
Yeah,
because of so many different things, right?
yeah,
I mean, COVID's been a big um uh, uh change. The change factor, I guess, is the words I'm trying to find at like 5 o'clock in the morning. And
yeah.
isn't that funny? I like, and Dale, you could probably sympathize with me. I do find it,
The mouth doesn't work as
the
well.
mouth
Just
doesn't work the
literally.
way my brain's working. My brain's like, yes, say this, and my mouth goes. It's so funny. But I was watching actually an interview with Mohammed Al Arian from that the old CEO of PIMCO. I think he's an advisor to PIMCO now. Anyway, he was talking about the workforce and how that's changed, and really there's actually employers now or people that are saying, if you try to force me into going back to the office full time, I'm going to look for different employment. Isn't that crazy?
Yeah,
Yeah.
Uh,
And
so-
our friend here, Paul, is saying you're kind of saying people are not going to work until the benefits stop. I think that's true. And the problem is that people who are doing this, who are not going back to work because of the stimulus checks they're getting, is basically what they were getting paid before. Is I think in vast majority is low skilled labor. So they know that
Yeah.
when the time comes, they're gonna go out, find a waitressing, whatever job it is. I don't know, but there's going to be supply for these jobs, but at the moment, why would they get off their couch and go out?
yeah, matter of fact, who was it that just told me? Somebody just told me over the weekend. Oh, actually, I think it was my neighbor told me over the weekend that here in the U.S. The unemployment stops July 1st. I may be mistaken. I think that's on a federal level, and because I haven't been paying much attention to it, but we were talking about that over the weekend, and so maybe that might be the catalyst that drives the jobs data and makes it a little bit. It improves it maybe in the coming months.
Clearly, without having any inside information, what do you want to bet that they're going to extend it again?
I don't think they will.
Okay.
I don't.
I hope you're right. Let's start from that.
Yeah,
I really hope you're right.
They don't have the same excuse with COVID as they did to be able to do that, Steve.
I don't think
But
so. Unless, go ahead, Dale.
No, I'm done.
No, I was just going to say, unless we see some, COVID variants run amok here in the U.S. and start creating lockdowns again for whatever reason, and I don't even know if that would ever happen. But I don't see it. I just don't see it anymore.
Let's hope you're right.
Yeah.
Well, there is something new. Child tax credits, I believe, will be starting. I don't know if they means test that or not, but 300 a child.
Oh wow! I'm gonna go have more kids.
Yeah.
Right.
I'm joking. Anyway, joking.
Yeah.
Have you asked Lisa?
Yeah. So hey, let's Steve, since I've got you here, let's talk a little bit about what you're seeing in the currency market, because right now I'm seeing more range bound environment. Like I said, if you guys are just tuning in a little bit late, I think the euro, we're going to be consolidating ahead of the Fed. I'm sorry, there goes my mouth not working again. Ahead of non-farm payroll, which comes out on Friday, and I think Friday we're going to have a little bit more direction in the currency market. You can see the Aussie is still range bound. We're between the 77 cent 78.20 range, nice 100 pip range. Dollar Canadian stuck in a this is about 150 pip 140 pip range, and I was telling the guys, I was telling everybody just a moment ago that going back and doing some of the basic training that we're implementing for Forex analytics in the coming months. And by the way, when you guys are, on the Forex analytics site, you're going to be able to go to, the education piece here throughout the course of this year. You're going to see this change, and we'll be implementing new videos and some education pieces for people that are like a little bit newer to the market. Whoops! Hey, look at that! I'm already subscribed.
Go ahead. Thank you.
But when you go to when I was filming, it's interesting how I was filming some of this basic information we take for granted as traders. I forgot, not forgot, but you take for granted, like something I said yesterday. I'm like, we're range bound more often than we're trending, and we've kind of been in a trending market for quite some time, but more times than not, the markets tend to be range bound. And so, we're seeing these ranges develop in the currency market right now. What do you think is going to break us out of the ranges, Steve?
I agree with your assessment to begin with, that we might remain a little bit, range bound. But I'm going to reiterate what I said previous time we had some event risk coming. Stocks want to move higher, dollar wants to move lower. So if we do not get a catalyst for something like that, then I believe after the event risk is over, we're going to continue in that direction.
Yeah. Okay. Well, that would make sense. I mean, stocks are stronger now. We are heading into and this I want to ask both you and Stelios, and this is a conversation that we got into yesterday during the daily roundup, and we saw this big reversal in equities yesterday. And the reason why that's important, and I want to point out that we're making lower highs. Now, I'm not convinced that the market's going down yet, because we're still making higher lows. So from a trend standpoint, we're making still making higher lows, but now we're making lower highs, which suggests that we might be range bound, more range bound. But because of this, and we're going into June, I have to imagine that seasonality might actually come into play a little bit more, because last year the market was in lockdown. I mean, the world was in lockdown, not the market. The world was in lockdown. This summer, everyone, even you guys in Greece that have been locked down forever, you guys are going to be vacationing a little bit, taking some time off. So how much of the, sell in May and go away, meaning, sell in May, come back and reestablish positions in the fall, like in October or November, could create a sideways environment for the equity markets, because we actually will have, a lot of institutional players, a lot of hedge fund managers, a lot of big money saying, hey, look, we were in lockdown last year. I'm taking some time off this summer. What do you guys think about that?
Could be. I'm personally looking at yields. If yields don't break higher, then I think it's not going to be sell in May, go away. It's going to be buy in May and buy champagne or something like that.
I agree with
that means if yields don't press higher going into the summer.
Yes.
Okay.
I agree with what Stelios said.
Yeah. Well, good. That makes me happy.
All right. Now, speaking of yields, and this is a good look of, here's like the 10-year, just so you guys can see where we're at, and maybe, just maybe, the breakouts that that we're looking for in the currency market might be coming here in yields. Think about like a strong jobs data or a strong jobs number on Friday. Strong jobs number on Friday maybe pushes yields a little higher, and maybe we do get a breakout there, and we'll see how equity markets respond. So guys, I just want to say, if you have not have had an opportunity to try out Forex Analytics, make sure you do so. Also, visit our webinar sponsor, which is Pepperstone Securities. If you do not live in the US or Canada, Open an account right through here. You can learn how to get Forex analytics for free for a few months based on how much trading you do. If you live inside the US or Canada, make sure you visit Forest Park FX. You guys might have heard Justin's interview on Friday. I thought that interview was great. What do you think, Dale?
Yeah, it was you know, a lot of great information for people to consider.
Yeah, it's really informative, especially if you don't really know how, the Forex brokers work. I think that was a really good, education for everybody. So the principal of Forest Park was with us last Friday for an interview. Anyway, I don't want to take away from your interview with John. I'm excited to hear John. But Stelios, Steve, thanks for joining us.
Thank you, Blake.
Guys.
Thanks, everybody.
Have a great trading day. We'll see you in 45 minutes if you're a Forex Analytics subscriber for the Morning Edge, where we're going to go through all the bias chart and everything else there. So we'll see you guys there.
Good
Bye-bye.
hunting, Blake.
Thanks, guys.
Welcome back, John.
It's great to be back, Dale.
Yeah, nice to have you. You know, I've been tweeting out there that when you were leaving in our last interview, I think it was March, and the one thing you said with conviction is just buy beans. Great call, John.
It's nice when they work, sir. It's nice when they work.
Yeah.
I feel like I had a Bitcoin call in there too. I may be wrong, but I feel like
yeah,
it's a
and you
Bitcoin
also
call.
had don't fade equity strength. I'm going to share my screen. Don't fade that equity still had upside. There was no reason to worry about it. And before we get to the markets, I had a conversation with Jack last week, and he talked a little bit about some of the unknown wizards. And I brought up your name, that I'd been talking to you, and Jack said that your time in the Marine Corps was transformational for you. That's where you lived, really learned discipline that you didn't have in high school. What kind of wild guy were you in high school, John?
I provided liquidity for those wishing to prognosticate on the outcome of sporting events.
Oh, that's right. Yeah, that's right.
Yeah.
Hey.
We may have spoke about that. I don't know,
Yeah.
but that was my ethos, was
Okay.
taking risk on the 49ers and Joe Montana. And it was a while ago. Okay?
Hey, John, this is Blake, and I wanted to interject really quick. I myself am a former Marine, and
Semper Fi.
yeah, Semper Fi, Devil Dog. I was in from 1990 to 1994.
Nice.
I was a Marine infantryman, so I was an 0311. I'm not
0311.
sure which.
Woohoo!
Yeah,
I was
aviation ground pounder.
Marine security. Right.
Yeah. So, but I was gonna say, Dale was talking about discipline as a trader, and I'll tell you, prior to my military experience, I was probably the most undisciplined young man you'd ever met in your life. But it really shaped I think it shaped me as an adult, but also shaped me as a trader as well. So if that's what it did to you, it's interesting how that part of your life could really impact you years and years and years in the future, isn't it?
It is and it isn't, right? Like superficially, sure, it is. It's amazing, but then for those of us who've been through it, like Blake and I, you understand the intensity of recruit training, which those first 3 months where they effectively break you down, you know what I mean, and attempt to, and again, our growth is a lifelong process. It's not necessarily compartmentalized to a 3-month recruit training or to in the case of you went to SOI or School of Infantry as an 0311. Did you go to Pendleton, obviously, for SOI?
I did.
Yeah. And so for those of us that go on a Marine Corps journey, and then I would say to complement what the Marine Corps did in terms of discipline was also constantly pushing you, or to those of us Marines who were amenable to it, outside our comfort zone. Going to boot camp was not a comfortable experience. And you knew that going in, which was, dare I say, part of the seduction. When I was in high school, and maybe you were the same way, Blake, but I actually sought out the Marine Corps recruiter. Okay. And I've talked to a lot of Marines which is bizarre. People say, wait, you sought out, there's this impression that you were duped or whatever. It's like, no, it's because of this persona, because of this cachet of the Marine Corps growing up. And I was like a very, very undisciplined, and so, knew that I needed better structure, knew those things. And it was like this sort of almost from Providence, dare I say, that
Yeah, go
was
ahead.
like, no.
You could say that when I'm interviewing you.
Okay, fair enough. Okay.
All
And so almost from Providence, all right, like there was this calling and this internal intuitive piece that when I saw the Navy recruiter, and I was 18 years old, I was a senior in high school, and Navy recruiter was talking to my buddies. The Navy recruiter was like, well, what about you? Have you thought about the military? And literally at that moment, and I don't know if I talked about this in the interview with Jack Schwager, but literally that moment I said, yeah, I'm gonna go join the Marine Corps. To the Navy recruiter, all right. And it just it just clicked, it clicked. And I called the Marine Corps recruiter, and he said, yeah, come on up. And I grew up in the East Bay area, and I had to get a bus, I had to make arrangements, and then the recruiter actually came pick me up because obviously I didn't have a driver's license in high school. I was not something I did. I was running a gambling operation, and that wasn't a focus, and so yeah, and then doing some stuff, and then November of '93, that was June of May of '93, about a month before I graduated from high school. But as tough as I knew that was going to be, I just had this piece about me joining the Marine Corps. As hard as it's going to be, as tough as it's going to be, I just had a piece about me, that this was my calling. There's a bigger calling from doing this.
Wow, interesting. Wow,
that is interesting. And I'll tell you, John, I'm not going to lie. I joined the Marine Corps because I was going to wear some dress blues, and that pulls way more chicks than any other uniform out there, hands down. So
I was not unaware of that ancillary benefit, to be real. And I'm not judging for that. Okay. Dress blues are legit. Dress blues are way legit. Okay.
Okay.
Yeah.
Hey, I'm going to let you guys continue on with your interview, but John, good to have you back.
Great. Good to be back, Blake. Appreciate it, buddy.
Bye-bye.
So John, okay. So, you go into the Marine Corps and now you're out. And did you know when you were leaving the Corps that trading was going to be your next endeavor? How did it happen? You knew while you were in the service?
I knew, yeah. I mean, and I'd done quite a bit of investing stuff even in high school, and I had read the Wall Street Journal stuff every day, and what was then Investors Daily. They changed it to Investors Business Daily. And so I had always had a love of finance and numbers and money and risk, especially risk. Okay. And that bordered on risking too much at times, and arguably having a quasi gambling challenge or problem or whatever you want to phrase it as, of wait a second, you're going on tilt here. That's sort of a poker term when you sort of let the emotionality of the moment dictate the risk you take, and you start chasing, so I think anyone who's been trading has been overcome from that moment of where you lose sort of sense of your amygdala basically hijacks your brain sort of from a neurological perspective. And when the amygdala hijacks your brain, you're in fight, flight, or freeze. And that is not you using your choroid region or the cerebral cortex of your brain to make objective, analytical, intuitive decisions. Okay. And so the Marine Corps definitely helped me. I would say I was going to sort of, before I got off on the sentimental nostalgia Marine Corps trip with Blake there, I was going to sort of talk about the discipline that comes from that people unappreciate, that you can go to the best business schools or the best law schools or the best, be the best quant. Okay. But if you don't have an understanding of your own emotions and how competitive one can be and how that competitiveness can manifest itself to become a risk event in your personal portfolio, it just doesn't matter, because eventually there's a very good chance that's going to undo you in your trading journey. Okay. In a dramatic way. And that, I think, is when we talk about discipline, it's if you can have an awareness and be disciplined enough. So when that time comes, because it's a mathematical certainty, if you do this long enough, you're going to get beat up by the market to where you're going to want to chase losses. Okay. You just if I can, I'm been in this for 20 plus years, and I still have days where I can feel that impulse coming. I can feel the amygdala begin to hijack my brain. And I'd be I want to get this loss back that I had from today. Let me just buy X amount of treasuries and I'll get it back. And I don't do that, obviously, but that feeling is there, and that feeling never goes away, no matter how long we're in this business. Okay. And so you just have to appreciate it. You have one of those odd members of your family that's just kind of he's just, it's just who he is. Right? It is who she is. You know what I'm saying? Just accept it.
Yeah. Your awareness kicks in that it's about to happen. Before you
Yeah.
didn't have that awareness,
Well-
kind of like being the watcher and looking at yourself doing it.
Yeah, absolutely. Absolutely. So
All right.
enough about my Marine Corps stints.
All right.
And
Well,
everything else.
I do want to get to the markets, but John, I think a lot of traders have unrealistic expectations that they could, read a book over the weekend, open a online account, and just do it. And Jack says, this is the only thing that you have a 50% chance of being right, long or short. And so, people think they could do it, but it's really as realistic as reading a book about brain surgery and thinking you could perform it on Monday. So, a lot of people think it's something that they could master. Most of the people I talk to, it takes years. So out of the gate, what would you say, once this became a full-time endeavor for you trading markets, how long did it take you to where you really had epiphanies and breakthroughs and, maybe you weren't a wizard status, but you were proficient?
I'm still not sure I'm a wizard status, honestly.
Oh, well, yeah, I
it-
know. I know.
it-
You're an
it's-
interesting
it's-
guy to write about that, has had success in the market. How did Jack find you? Through Fund Seeder or?
Yeah, through this crazy thing called performance on Funseater. It
Yeah,
just sort of
okay. All
it
right.
just sort of worked out that way, that the performance of my account, those uploading data statements, did, in his
Yeah.
opinion, did well enough to warrant the attention and the interview. So there you
So
go.
how many years before you started having that kind of performance? Wasn't right
No,
out of the
great
shoe,
question.
was it?
No, gosh, no, heavens, no. It came with a lot of pain and came with a lot of tuition. That's for sure. The early years I talk about in the interview with Jack were up and down, and I had to use my. I was a proficient trader. Okay, I was a trader that you could give me. And I'm not saying I ran this in AUM terms, but let's say you could have given me $100 million like 3 or 4 years in, and I would have like made you 5 to 7% a year. Okay, like I because of the Marine Corps, like truly blowing up was not really a risk out there. Those emotions I talk about definitely took over and they led to outsized losses, but they never led to any blowups. Okay. And I was at least aware enough that, hey, dude, this is not, you got to just stop this now and walk away. You know what I mean? Before the losses got so incredible that, that you couldn't recover from them. Right. But to answer your question directly, like when I became sort of the John Netto of today, like I would say in 2021, I'm probably trading as best as I ever have. And I was trading really well in 2020, and I traded really well in 2016. My best year on a personal level from a P&L perspective was 2013, from an absolute like pure numbers perspective. But I'm a much better trader today than I was in 2013. In 2013, I happened to catch some markets that that were in a strategy that I used the right amount of leverage on, that played out really well. So when you talk about and I've had some really great years since then, but not quite as good as P&L in terms of 2013, right? But again, solid year this year, good year last year. 19 was you know what I mean? 18 was a really good year. 17 was really tough. 17 was my toughest year in the last decade.
Okay. What was your self-talk? I say that, a lot of people say, hey, I'll sell you the secret of how you trade. And, it's my view that the secret is there is none. It's hard work and living through adversity. If that scares you, do something else. So what was your self-talk during the times you were going through drawdown so that, you were able to manage it and not have it turn into a disaster?
No, great question. My self-talk was that up to 2017, so let's take 2017, which was a rough year, meaning that I didn't make any money, okay, in 2017, or I made a very minuscule amount of money that didn't even cover my expenses. Okay, so that's like a full year of work that after expenses, you lost money. Okay, I didn't lose money trading P&L, but some of the self-talk for that time was, dude, look at your last 7 years of P&L.
Okay, there you go.
So it was like, remember we did in 2013 and 2015 and 2016? Well, if you average what we did in 2016, 2017, you're still crushing it. You know what I mean? And so when you have the numbers in front of you, which then puts the emphasis on data collection, right? Because if you don't have the data in front of you, can't identify and compartmentalize what you're doing well at and what you're doing, poorly at. And then you can break those out. Like that's what helps you. That's the self-talk is, okay, let's look at the data, because if you look at the data, you can analyze the data And I don't mean you didn't have every single nuance, every single thing. If you can do that, that's great as well. But if you can look at your track record, look at your P&L, identify a strategy. Oh, look at this. If I took this trade, you know, I mean, if you're developing a strategy, and you can look at it and say, well, wait, the strategy worked, but I didn't execute well enough based on an objective set of criteria. Well, then your self-talk is, oh, look at this data. I now know I have a path to fix this. And if people have a path to fix something, then they have hope, Dale. And hope is a freaking powerful elixir.
It is. Yeah. Not on trades, in your life.
In your life.
I mean, you don't hope that, I mean, this is what I've heard people say this. I've heard it in my head. I hope this one works.
Well, I don't mean it that way.
Yeah, if you're saying that, it's time to take a break. But great to get some background on you, John. I Bitcoin chart up here, and it was a pretty classic topping pattern with that 3 drives to a top, and the market's divided. I thought we could go to 36. Here we are. We're trying to stabilize. Your view on crypto, and if Bitcoin.
My view, I'm more bullish Ethereum. Probably like a lot of people, I'm more bullish Ethereum than Bitcoin.
Okay.
And the whole DeFi space. I've been long Ethereum. Again, can't guarantee this will happen the next time, but I managed to largely sidestep this wipeout from 2 weeks ago, and just be very, it's just been a great market to trade. There's just no other way to say it. You know what I mean? And it's almost to the point that, like, every other market, not completely put aside, but like the Ethereum and Bitcoin markets are just moving so much. They have such a flow to them right now. You know what I mean?
Yeah.
And I'm fundamentally bullish them as well. So like my basically the strategy I'm using for crypto now is like, I'm just waiting for these wipeout points. That there's, at least in my opinion, there's very clearly buy programs of institutions that are going to own Ethereum, that are going to own Bitcoin. I like Ethereum more than Bitcoin right now. And I think that, as crazy as it sounds, I mean, I think when I was on here in March, I talked about Bitcoin going to 60-something thousand, I believe. It might not have been yeah. So we were 65,000, you know what I mean? 4 weeks ago in Bitcoin. Okay. Right. So like that ring the register on that trade, you know what I mean? And then really right now, I think we're going to see that number again in Bitcoin probably like by September-ish. And I think that the bad boy is Ethereum. Like, I think Ethereum now, what is it? 27, 22 right now.
703, yeah.
That's why, fair enough, yeah. So I think that bad boy is going back to like, I think it has like a 6,000 handle on it by year end. Even a 7,000 handle on it by year end on Ethereum. Wow. Yeah, wow. No, this is no joke. I think that this is a space that is offering maybe the most transformational generational wealth in my entire 20-year trading career. And I think that if you struggle trading, and again, read all the risk disclosures and everything else, but on a non-leveraged basis, okay, if you can get in and own some Ethereum, and if you struggle trading, you park it and come back and check in with me in December, okay? And you buy your Ethereum at 2,700, okay? And it may go back down to 2,000 again, all right? But I think it's going to have a 7,000 handle on it by the end of the year. It's going to touch 7,000. And you put your limit order in, you put your limit sell in. Yeah, go ahead.
Yeah. Okay, so there's a crypto space. Curious, what you think about some of the altcoins, especially some of the hype, like on Doge. Doggy.
Here's the great part about that is that to me, they're incidental to the move in Ethereum. I think in Bitcoin, but like you can have an opinion, but it's not totally necessary for the call that I just made on Ethereum to like tell me where Dogecoin is going. You know what I mean?
Yeah.
Or to tell me where Cortana is going, or Link, or some of these other guys, which I think are, again, not a bad thing to have your portfolio. But I just mapped out a process that's going to put Ethereum like basically the price point that like a lot of other stuff around that to me is just largely noise. It's not inconsequential, but it's just like, what did I just say? You know what I mean? Like, okay, that's your focus, right? Like,
yeah. Yeah. And why get sidetracked in these altcoins, right?
I don't know. I mean, listen, there's a lot of altcoins that if Ethereum pulls off the move I'm talking about, are going to pull, 2 or 3 times that, or 10 times that. You know what I mean?
Okay.
The question is, are you in them, and are you, depending where you're at, like, if you're someone that manages money for people, I would say at this point, if you have a 2 or 3 or 4% allocation of crypto, that's now defensible. And I think that's the big sea change that wasn't there 3 or 4 years ago, is the defensibility of owning some modicum even of crypto in your portfolio that just wasn't there before. And I think you're seeing, people migrate, and it's good to see gold kind of back above 1900 again, but kind of, crypto sort of doing what gold was supposed to do, year on year, right? Like there's this epic amount of government printing, there's this epic amount of, whatever, and whereas in the gold space, I hate to say it, but like the miners are working against gold. Okay. Like they're trying to find more of it, etc. Whereas like in Bitcoin, and there's conceptually some really brilliant things that the crypto space has done in terms of like, just the halving dynamic and some other stuff. And it's really fascinating. And I kind of like Bitcoin's just it's been a better inflation hedge. And we look at crude right now, look at some other commodities out there. Inflation's here, Dale.
Yeah. Maybe you could explain it to me. A friend of mine who's been in markets for a long time was writing about an inverse relationship between Bitcoin and gold that he was noticing on days when gold was up, Bitcoin was down. Is there anything to that? And if there is, what could be behind it?
Sure. So let's take a couple of shots at that for a moment. Okay.
Okay.
I think what gave gold. So there's 2 different things that happen, and one of the big like law school sort of like phrases or principal arguments when you take the LSAT and then go on to law school is like correlation. And this is not just in law school, but correlation is not equal causation. Okay, correlation does not equal causation. All right. So let's examine what happened with gold going back to November and really why it struggled up until really recently, to where it's kind of regained its footing to be sort of basically unch on the year. Okay. And I would argue that what has hurt gold has been when treasury yields began to rise. All right. When we saw the vaccination news come out in early November, what you were seeing is gold and treasuries began to struggle. Obviously, yields go up, treasuries go down. Yields go up, also gold go down. Okay.
Right.
As this whole economy repump play come back on board again. And one of the benefactors of gold was that it in a world of negative interest rates. Okay, the fact that you were getting a positive or quasi positive carry out of gold left a good impression there. Now, concurrent to that, okay, not necessarily caused by that, was the November sort of Bitcoin breakout. All right, and what you had was sort of this collective discovery. All these, when Bitcoin's now 13, 14, 15,000, and you're getting all these announcements from PayPal, from Square, from these institutional allocations that all hit in November, which helped perpetuate this year-end ramp up in crypto that was not necessarily having to do with rising yields or anything. There was this more existential institutional acknowledgement of the viability of crypto, and in particular of Bitcoin, and the allocations that were coming on from more and more institutions day after day in the month of November, which was sort of this big kind of breakout month for Bitcoin, which coincided with sort of the discovery of the announcement by Pfizer of the vaccine, and again a tick up in rising yields, and we saw yields move pretty demonstrably in up, and gold succumbed to that. So those 2 things, I think, if you want to talk about the inverse correlation between Bitcoin and gold, were at play there, and I would attribute more of it to that than more coincidence than actual long-term inverse correlation
or planning that that it would be an instrument like that.
Right. And I don't rule out that, we have maybe this leads to our next subject in terms of the Fed, in terms of inflation, but the Fed's behind the curve right now. Okay. And I mean, I've lost a lot of respect for them. Not that I had much to begin with. Okay. But the idea that like they, are talking about like this inflation being transitory, and that, we're not even thinking about raising rates or whatever. And it's like, listen, people, you came out in March of 2020 with a 100 basis point cut, due to emergency actions. Okay. We now have like epic fiscal stimulus. We now have incredible constraints in the supply chain. And I appreciate that for 10 years, we were in a disinflation or quasi deflationary global environment. Okay. I'll grant you that. Okay. But right now, like we saw average hourly earnings tick up. Let me tell you what kind of inflation is not transitory, Dale. The kind of inflation not transitory is freaking wage inflation, because you ain't raising someone's wages and then going to cut them a month later. mofo.
Yeah,
All right.
great
You're
point.
not doing that to me. You're not raising my wages and then cutting them a month later, like you can to the price of oil. Okay. Or groceries. All right. Those can fluctuate, but my wages, they're not fluctuating. And so we're starting to see, the non-farm,
Especially with the labor shortage, right? The so-called labor shortage. They're going to have to, yeah.
Yeah, no, that's not happening. Okay. And so you're going to have to raise wages. Okay. And when you raise wages, they're staying, they're not going back down. Okay. And there's 24 states that just cut the unemployment benefits. Surprise, surprise. You mean if I make the same doing nothing and I make the same work and I'm not going to go work? No way. Really? So, okay. So the bottom line is that this wage inflation is here. And that's the one piece of the puzzle that the Fed is like, kind of like the stun has been blitzkrieg by this kind of whole situation. And I think that there's a reckoning.
Well, they can't print grain either.
No, they can't print soybeans or corn. They
could crack economically sensitive markets with higher rates like lumber and maybe copper. And so that's really a big statement. Yes,
Dale,
Steve, go ahead.
May I interject?
Sure, go ahead.
Okay, so you think that inflation is moving higher, correct?
Yes.
Do you think that rates are going to be moving in tandem with inflation, hand in hand?
No, not hand in hand, but I think it'll happen.
Okay, so why do you think this is an environment that's negative for gold? Because gold never cared about nominal rates. Never ever did in history and never will. Since we agree on the thesis that inflation is going higher, check. Nominal yields are not going to move as fast as inflation does. Then why is this a negative environment for gold?
So two things to respond to that. Okay, the first is that we were identifying. The question was about the inverse correlation between Bitcoin and gold. Okay,
yeah.
And so
he
Dale
didn't
asked
say
me
he was negative gold.
So Dale asked me to walk through what might explain the perception over the inverse correlation between Bitcoin and gold, and I walked through that going back to November. That market positioning around sort of this zero yield, the benefit of gold in a portfolio in a zero or negative yield environment came under significant P&L duress from people that held gold, as the number of people who had held gold were sort of were forced to liquidate during that sell down. Okay, so that's my first.
There is some kind of opportunity cost for gold, but there will never be an opportunity cost for Bitcoin or any other cryptocurrency because they will keep climbing internally.
I don't deal in categoricals, but about nevers and always. I stay away from those two terms, sir. But I will say that gold has been clearly challenged, and the performance of it, over the last, I would say, since it peaked out in August, has left a lot of frustrated traders. I mean, I've been bullish gold. I've been frustrated by and I've migrated or transitioned that bullishness over to the crypto space. And the price action has been rewarding, but that's easy to say in hindsight. But now let's talk about going forward. Okay. Mm-hmm. So going forward, in terms of my price target on gold, I think that gold can be, I think it will be a beneficiary of this sort of aha moment, to your point about nominal yields in gold. And I think that if this aha moment happens this summer, gold could be at 2,100, 2,150. But I think Ethereum is like going to outpace it, and even Bitcoin will outpace it. But it doesn't mean you shouldn't own both of them or have exposure to both of them. I was just
no disagreement there. A portfolio has space for many assets. There's no question about it.
Sure.
John, you know what? You're not only able to trade, you're able to communicate market ideas in a very clear and concise way. So why don't we wrap it with a legacy market? You were talking about, I don't know, maybe you were talking about this summer, you had a target in S&Ps. Anything changing there with NASDAQ lagging? Any yellow lights that you see yet? Or are you in the camp that we could still have a melt up? I know a lot of guys looking for a melt up, maybe even a 46, 4,700.
Yeah, it's awfully hard for me not to see the S&P 500 in a year from now, not with like a 5 handle in front of it, frankly. Okay. 12 months going forward. All right.
Okay.
We are, I mean, what good that does someone right now, I don't know. You know what I mean?
Yeah.
Could we sell down? I mean, I'll say this. Let me say this though, but I do think that one thing and that has shifted, okay, is this idea that inflation and these economic points are now moving the markets. Okay, so I would say this, like, that for the first time since pre-COVID, like, pay attention to these CPI numbers. Okay, pay attention to the employment cost index, which comes out quarterly. All right, at the end of, so in this, the next ECI is going to come out, July 31st, July 30th, comes out, concurrent to GDP. All right, and so watch average hourly earnings now on this number, because I'll just say this and walking away, is that what was problematic on this last payroll number when we missed was that we had, we were 500,000 or 600,000 or 700,000 jobs short of the survey, but it was the average hourly earnings that had risen. And this is sort of a new kind of economic frontier that the Fed's just not aware of, is that people are just not taking jobs. I mean, there's now 8 million open jobs, and the sentiment behind employers is that they're not going to have to pay. They're going to have to pay more. Okay, so I think that net, this ultimately will be bullish to gold and go from there. But those are the things I would watch, is that this changing narrative. If you get the narrative right, it's going to make trading a lot easier. Okay, get the narrative right, and the narrative is inflation more than transitory? And if it comes via wage inflation, it is. There you go.
Great interview, John.
Great stuff, Dale. Thank you, guys. Thanks for the whole
Thank you
team
so much, my
stuff.
trading warrior brother. Thank you.
All right, God
All
bless
right,
you.
everyone.
Peace,
John Netto at John Netto. That's a wrap, everyone. Thank you for hanging out, and good hunting the rest of this session. You could join the gang in 14 minutes for Morning Edge. Remember, don't just count your pips or your cryptos or your shares or your gold coins or Steve, your silver bars. Count your blessings, and that's really all I have to say. Everyone have a great day. See you tomorrow. Adios.